The silver market is a rigged game, and right now, thousands of investors are falling headfirst into a $3,000 trap that will leave their bank accounts empty while the big banks laugh all the way to the vault. Everything you've been told about silver being the ultimate safe haven is a partial truth designed to keep you buying while the smart money prepares to pull the rug. But there is one specific hidden buyback clause buried in the fine print of the world's largest bullion dealers that almost nobody knows about. And if you stay until the end of this video, I'm going to show you exactly how to use it to save your fortune before the window slams shut for good. Hey everyone, it's Alex here from Alex Talks Finance. I know why you're here. You've seen the headlines, you've watched the inflation numbers climb, and you've seen the silver squeeze trending on social media. You probably have a stack of coins or bars tucked away, or maybe you're thinking about dropping your next $3,000 into physical metal because it feels real compared to a digital number in a bank account. It's a logical move, right? In a world of infinite money printing, a shiny piece of metal that's been used as currency for 5,000 years should be the ultimate insurance policy. But today, I have to be the one to tell you that the insurance policy you've been sold has a massive gaping hole in it. There is a reason why veteran stackers are suddenly panic selling their positions, and it isn't because they've lost faith in silver. It's because they've realized they are caught in a liquidity trap that is about to snap shut. Think about the last time you walked into a coin shop or scrolled through an online bullion dealer. The prices look great, the marketing is beautiful, and the spot price seems to be on a steady upward trajectory. But there is a massive difference between the price you see on a chart and the money that actually ends up in your pocket. This is where the $3,000 trap begins. Most retail investors start their journey with a modest investment, usually around that $3,000 mark. It's enough to feel like a serious hedge, but small enough to be accessible. However, that specific price point is the danger zone, where premiums, taxes, and shipping costs eat up nearly 20% of your upside before the silver even reaches your doorstep. You're starting your investment journey 20% in the hole, and that's a gap most people never recover from. But the trap goes much deeper than just high premiums. We need to talk about the paper versus physical war that is currently tearing the market apart. For every single ounce of physical silver sitting in a vault, there are hundreds, if not thousands, of paper ounces being traded on the digital markets. This is how the big institutional banks manipulate the price. They can drop a massive sell order for paper silver in the middle of the night, crashing the spot price and triggering stop losses for everyone else. While you're sleeping peacefully with your physical silver under your mattress, the value of that silver is being decimated by a computer algorithm in London or New York that has nothing to do with actual metal. You might think, well, Alex, if the price drops, I'll just hold on to it. It's physical. That sounds good in theory, but what happens when you actually need that money?
Imagine this scenario. The economy takes a sudden downturn, and you need to liquidate your $3,000 silver stack to cover an emergency. You go to your local dealer, and suddenly the friendly shop owner who sold you the silver at 30% over spot is now offering you 10% below spot to buy it back. This is the liquidity nightmare. When the market panics, the spread, the difference between the buying and selling price, balloons. You are essentially trapped. You have an asset that's worth money on paper, but in the real world, you can't get your cash out without taking a massive loss. This is why we're seeing a wave of panic selling today. The smart money realizes that in a real liquidity crunch, physical silver is one of the hardest assets to move quickly at a fair price. You might be thinking, but Alex, what about industrial demand? Solar panels, electric vehicles, and electronics all need silver. Surely that will drive the price to the moon. You're right, industrial demand is higher than ever. But here's the secret the big mining companies don't want you to know. Industrial users don't buy silver from your local coin shop. They have direct contracts with miners and refiners at prices you will never be able to access. They don't care about your 1-ounce buffalo rounds. If the price of silver gets too high, these massive corporations will simply find a cheaper alternative or lobby for regulations that keep the price suppressed. The idea that Elon Musk is going to come knocking on your door to buy your silver stack is a fantasy sold to you by people who want to sell you more silver. Let's get even more real for a second. Have you noticed how many gold and silver influencers have popped up lately, telling you the dollar is going to zero tomorrow? They want you to be afraid. Fear is the greatest sales tool in history. When you're afraid, you don't look at the math. You don't look at the storage fees, the insurance costs, or the fact that silver is incredibly heavy and difficult to transport in an actual emergency. If you had $3,000 in silver, that's a significant weight. If you had $30,000, you need a literal safe bolted to your floor. You become a target. You're not just an investor, you're a person with a pile of untraceable wealth in your house, and in an unstable economy, that is a massive liability. So why is the panic selling happening today? It's because the Federal Reserve and other central banks are signaling a shift. For years, they've allowed the silver squeeze narrative to run wild because it kept retail investors occupied while the big banks moved their capital into more liquid, high-yield assets. But now the game is changing. Interest rates are staying higher for longer, which means holding an asset that pays zero yield, like silver, is becoming incredibly expensive in terms of opportunity cost. If you could put that $3,000 into a high-yield savings account or a treasury bond and earn 5% guaranteed, why would you risk it on a volatile metal that could drop 20% in a single afternoon? The people who are selling right now aren't weak hands. They're the ones who have done the math. They realize that the $3,000 trap is real. They see that the paper market is completely disconnected from reality, and that the physical market is becoming a playground for high-fee dealers. They're moving their money into assets that provide actual cash flow, because in a recession, cash flow is king, not a shiny metal you can't spend at the grocery store. But wait, I promised you a secret. I told you there was a way to navigate this trap and a specific clause that could save your fortune. Most people think that once they buy silver, they are stuck with whatever price the local dealer gives them. But there is a group of private bullion exchanges that operate on a different set of rules. Unlike your local coin shop, these exchanges are legally required to maintain a specific market maker status, which means they must offer a buyback price within a certain percentage of the spot price, regardless of market volatility. This is the fair exit clause. If you know which exchanges have this designation, you can bypass the local sharks and get a fair price for your metal, even in the middle of a total market collapse. I've spent months researching these specific institutions, and the difference in what you receive can be as much as 25% of your total investment. The truth is, silver can be a part of a healthy portfolio, but only if you know how to avoid the traps that are set for retail investors. You have to stop thinking like a stacker and start thinking like a fund manager. You need to understand the spread, you need to know your exit strategy before you even make your first purchase, and you need to stop listening to the doom and gloom influencers who are just trying to collect a commission on your fear. If you want to be part of the 1% of investors who actually know how to protect their wealth without falling for the traps of the big banks and high-fee dealers, then you need to stay informed with the real data, not the hype. Hit that subscribe button and join our community of savvy investors who are tired of being lied to. We're building a future where your hard-earned money stays in your pocket, not the vaults of the elite. Before you buy another ounce, ask yourself, do you have an exit plan, or are you just buying into the trap? The market is moving fast, and the window to protect yourself is closing. Don't be the one left holding the bag when the music stops. Make sure you're subscribed so you don't miss our next deep dive into the hidden world of finance. I'll see you in the next one.